Welcome,
Go.
everybody. I'm so glad to have you guys on the show here and where we talk about taxes and real estate and businesses. And I'm excited to have our guest, Daniel Brown, here. And we're going to talk about his journey to navigating the world, first starting in rentals and flipping and development, and some of the things that he's learned along the way and the tax implications of what he's doing. Dan, can you introduce yourself in 60 seconds or less?
Thank you, my friend. I live in Texas, but the accent may give away it's not my original home. So I'm a Brit. My old business was a chain of jewelry stores in the UK. Sold that 11, 12 years ago. And then my wife and I and our 5 kids decided to emigrate, follow the cheesy American dream, but I do believe it's alive and well. We lived in California initially, moved to Austin just over 5 years ago. Austin is home. I fell into real estate because I had to put money somewhere. So I bought a bunch of rentals around the US, and then over time turned it into my real business where I moved into fix and flips and eventually new construction. And our business now in Austin is focused on building high quality spec homes all around the Central Texas area and selling them on, just buy, build, sell. And that's kind of our journey. I'm a health geek. I'm a personal development geek. I can go off all sorts of interesting tangents. So let's see where you take me today.
You know, to the audience who doesn't realize this, and this is where I got to get better at, is remembering to hit the record button. So we were talking about some interesting things. We're going to summarize it real quick. I was talking to Dan about, he started off with doing rentals and flips, and what one of the things we talked about was the rentals got kind of boring, and the flips didn't really allow you to create your envision. Can you just retell you the journey of what got you into pivoting into doing what you do now, and what's the advantage of what you're doing?
Yeah. Well, rental as a starting point was purely, I've got cash from selling my old business and where am I supposed to put it? And everyone says you should own real estate. So I did. That's a very simplified version of it. Ended up with a bunch of rentals, started in the UK and then heavily in my new country right here. And once you've got them, you've got a property management company looking after everything, nothing else happens. So my entrepreneurial brain then was bored and looking for things to do and looking to be more aggressive. And I just followed what seemed like a natural next step. Okay, flipping houses. I've seen it on TV. I know some people now that do that because I've got rentals. Let's try flipping houses. It was great. It was horrible. It was a mixture of both because some went really well. Some I lost a fortune on, but it was great learnings along the way. Then fell into the next step. I was living in LA, California at the time, and did some high-end new construction, which I really liked because I got to create what I wanted. And other than the limitations or the challenges you might have dealing with the bureaucracy of whichever city or county or whatever that you're in, you're kind of in control. With a flip, you've got a base that's already there. It's like, this is the size of the house. This is the footprint. These are the ceilings. This is what's there. And you also don't always know what you're going to get, even with the best due diligence that you've bought it. And I like new construction because I can say, I have a vision for the home I want to create, and no one else is going to control that but me. And that made sense to me. And then we moved to Austin for lifestyle reasons. And this was then exaggerated because Austin is really not a fix and flip kind of city. It's a heavy new construction city. And that became our core. And now that's our key focus. Like right now, today, we have 13 homes on the go at various stages, a few on the market, a few about to hit the market, all different elements. But that's our heartland.
And another thing we were talking about here. Now, I have seen HGTV birth some pretty unprofitable, house flipper, side hustle folks where, and I don't get it because I'll see these guys on HGTV and they have a whole episode about a house that nets them like $40,000, and which is I guess all right, but you have a lot of volatility. You don't really know what's going to go down in these properties until you actually work on it, and also. It's when we talk about tax advantages of real estate investing with flipping, it's like the opposite of what we see with rentals. Because with rentals, you have cash losses with depreciation, and you accelerate that depreciation with cost segregation studies. We have instances where clients, especially back in the good old days of 100% bonus, where a client would put 10% down on a second home mortgage and write off like 35% of the property. So imagine getting a tax deduction with
Fabulous.
leverage that's in excess of the cash that leaves your pocket. We love that. We love when we're getting a deduction greater than the cost to create it. But we kind of see the opposite here, where cash leaves your pocket, you're rolling your profits into inventory, and you can't write off any of the inventory on your taxes until the property is sold. So liquidity and also budgeting for taxes becomes a challenge here, especially for new folks that haven't had the opportunity to really build up a nest egg of cash in order to collaborate with the tax advisor and have a really solid game plan here. And so tell me about so how you in the early or in current stages, how do you navigate this path of making sure liquidity is not a concern and you always have enough cash to reinvest into these vehicles as the projects are being completed and you're not being hindered?
And that whole tax piece is so interesting. This for me is about dog wagging tail or tail wagging dog kind of thing. So for you and all your tax-based listeners, the next thing I say, I don't intend to offend. I don't care about the tax. What I care about is the end result, whether that comes from more profitability or lower taxes or whatever it might be. It's all ultimately different inputs to get a result. And I think, and this is only just hitting me kind of as we're talking, I think that rentals are more in that passive investment world. So it can be a side piece of your normal life. So you've got your job, your role, your entrepreneur, your business, whatever else, and you have some capital. Can putting a bunch of that capital into rentals make sense? It can, absolutely. It's just my opinion, but it can be a steady source of income. You're owning a real tangible asset, and then people like you can do all sorts of clever things to create all sorts of tax advantages. And that's great, because if that's me and my entrepreneurial business, which is selling a widget of some other sort, this sits very separately and doesn't distract me very much. So I can see the potential. As long as, I will say, people can take on enough different rentals to diversify. So you can never guarantee success. If you decide to take on a single rental home, if you're unlucky, that's the one that doesn't work out well. And then everything was in that, and that becomes a distraction as well. So I've often said to friends, if you're going to get into that, you want to own your own rentals, potentially create a situation where you can get into a few quickly at the same time or close behind each other to spread the risk. And then that's when a tax expert like you comes into play. Flipping houses and new construction for me is different. I apologize to anybody I insult, that should be left to the professionals. Now, for many years, I wasn't one. So I lost a fortune on some of these. I also made a fortune on some. And when I had my aha a few years ago, really started to reflect on it, it was the learnings from the ones that went wrong that were probably even more powerful than the ones that didn't. And luckily, I had enough capital behind me to keep going, because they always say, the journey towards success is just a long journey, and lots of the paths off that are failure. You just have to keep going long enough to get to success. Now, I was able to get to that point. But to take on a flip, like one of the TV shows you see, or a new construction piece, can take over your life because you know nothing about it. You're going to outsource to a GC who, unfortunately, often won't do a great job, will go over budget, will be slow to communicate, will run late, and everything will cost you more and more and more. And you're trying to live your normal life working 40 or 50 hours a week and doing this, in the evenings and in the weekends. And it's horror story time. And that's why it makes good TV shows, because then someone can swoop in and save the day. But I think it's realistic that can be a problem. Now, there'll be somebody out there listening who is an amateur, so to speak, who's had great success with new construction. Great. I'm just generalizing, intentionally generalizing, and saying be cautious if something's going to occupy a huge amount of your time and focus, and you've got to be the professional. I lost a fortune over the years by being too trusting of general contractors. They make the promises, they're going to commit in the right way, but you don't really know how they're going to be until you start working with them. I don't have that problem anymore because we're the GC. I don't rely on anybody else in that way. We run it ourselves, and that gives us a lot more power and control. But there's a lot of danger along the way. So in some ways, it's like, well, which is the least distracting, best tax advantage thing? It'd be taking on a few rentals at the same time and turning to you or someone like you and saying, make this work even better for me. That's great for the passive investor. I think unless you're going to turn pro, be really careful with flips and new construction. I may have gone off at a
Oh,
tangent. Let me know how well I'm answering your question.
yeah, so I and thinking about this, obviously we love the tax advantages of rentals, but that's only one equation here. And even if the rental is going to appreciate in cash flow and all those beautiful things, it still may not be the best way for you to deploy your resources, because what is likely better than any rental is a really good assistant. A staff member who can deliver, who can increase, who can drive profitability year after year and empower other staff members. So as a business owner, it's easy to get carried away and obsessed when you hear about all these cool things with rentals. But that's the tax savings and profitability is only part of the equation here. And we found, when people ask me, what are you investing in? I said, well, my best investment is in my staff. Because that's all we are, as especially in the service industry. That's all we can really stand by. Processes and staff.
I so agree with you. I'm a huge fan of a number of great books and authors and Instagram personalities, but the standout that you're making me think of right now is Dan Martell and his wonderful book Buybacky Time, which I'd recommend to any business owner, leader, etc. And it's exactly that principle. If you've got excess capital, part one, develop yourself. Part two, have an executive assistant and develop your team further and so on, and free up your time and your focus and improve your own skill to go do more of the thing you already do well, and let that be where you get the biggest return. Now, obviously, if you get to a point where I've done a lot of that now and I'm still got excess, go you, now go find ways to invest it. And it might be that a rental portfolio is the way to go. I can almost guarantee it's not going and doing side hustles or flipping houses or building new ones. That will just create distraction. So I think we're very much on the same page there.
In way of saving time, I purchased his book on Kindle, and I pasted out the section on emails and gave it to my VA, and I said, do what this guy does. So we just
Brilliant.
took a page out of his playbook there. And when it comes to buying back your time, I mean, I'll always say the best investment you can always make it is in yourself and your education. And I'm wondering to you, were there any particular times where you had cash and invested it in something, or time and invested it into something where, maybe you could have done another project, you could have done a rental, you could have, but maybe you had a coach or a resource or even a book or a course or something that was transformational.
Yeah. I mean, look, you and I met through Genius Network, and I'm a huge fan of that. That's a serious expenditure, and it's been transformational for me. Like, my life has changed, my health, my self-belief, my connections, my business in general has rocketed. And they're big. They talk a lot about 10xing your investment. So whatever you're spending on Genius Network, we would like you to think that you're getting at least a 10 times return on that. And I actually am. I could prove that I have had a 10x return on what I've spent so far. So that's an amazing thing. And going to the right courses or conferences or whatever it might be, I've had a number of those inputs over the years. Now, the challenge, I think, for anyone is, there's that phrase, quote, knowledge is power. And I chat with my COO and co-founder, Henry, often, and we say we disagree. We actually think applied knowledge is power, because you can learn stuff all day long. If you don't do anything different, what's the point? And the greatest challenge whilst reading a book or being at some great conference or an entrepreneurial mastermind is the actions you take away, actually really doing things. So when I read a nonfiction book, I've always got my highlighter with me, and I'm highlighting every page or phrase or section that seems important. And when I'm finished, I go back through and take a photo of every page that has that, and I put it in a folder in my phone. And then I read through all those photos and work out, right, that's the thing I need to go and do. And that's the thing I need to tell somebody about, and so on, and try and force some action so something is different. So it's almost like telling people how to suck eggs, how to read a book. But now I'm saying how to actually apply something that comes from that.
Oh,
It's
and
so important.
it's amazing how many books I have on Audible, and it's really easy to fall into the trap of before you implement this book, you get this kind of you you get this shiny object syndrome. Like, oh, well, this book, this is the one that does it for me. And when you
Mm.
look back at all these books, I've realized it's easy to, you'll often realize is had you just taken each of those books and just applied the knowledge, like of just thoroughly digested and implemented what you learned in that one book, you probably would have been far further along than rushing ahead and jumping to all these new concepts and just trying to internalize everything, assuming you're just gonna
Yeah.
have it all downloaded into your brain. And what I've called this, the phrase I call this is intellectual masturbation.
Which sounds like so much fun.
You're just getting all stimulated, but nothing comes out of it.
Well, yeah, you're just seeking short-term pleasure rather than long-term happiness and peace there.
Yeah, I
When we
mean,
know that's
you're
not a good
experiencing
idea.
the joy of learning, and you're like, oh, this is cool. This is so interesting. I got to do this. But at the end of the day, if actions aren't being created by it, then you're missing out on a lot. So what I've done as well is, while I
Yeah.
love audio and I will listen to audio books in my car, I'll write myself like some key takeaways in the car, like I'll send a voice message to myself. But also, if you find a really good book, if you can, like you said, sit down and really make some SOPs out of this book, like with Dan Martell's book, which I didn't even read. I think I listened to it, um, but that's really where the beauty is if you can really turn this to action.
You can even play with something like Chat
Yeah,
now, Chat GPT. And I sometimes here are the 10 favorite pages I took photos of that book. And I just quickly upload them and say, Chat, look at what I highlighted, which it can now tell. It can actually see the
that's
yellow
awesome.
highlight on the image and make me a summary of what I've put up here. And I'll read that summary and then maybe make a calendar reminder to myself for a month's time to reread that summary because I feel like it might be relevant. There's always ways. And I haven't done this much, and I'm going to do it more. Some people talk a lot about
Oh yeah,
rereading the great books as opposed to reading new ones. And the reason I battled it is because of my own little self-talk around, I want to read more new books. It's that same thing. It's like, I want to get through. Last year I got through 65, and that felt like an achievement. Now, it actually was because I did change many things in my life by reading those 65, but I could have just been driven by the number. I got through 65 and changed nothing, would have been a complete waste of time. And I look back at certain books and think they're really beneficial. And as a team in our business, we actually have our little book club now where we read a book, not together, but over the course of a month. And then we get back together and share it at our monthly meeting. And what's great is it's forcing me I only want to recommend a book to my team that I've read already and think will be a good fit. So I at least reread it once so it's fresh in my head when we get back together. And the number of enlightened moments I've had by rereading these books has been so interesting to me. So now I'm much more relaxed and focused about going back over the winners and reading them again and going
yeah.
deeper. I think
I
it's
have
really powerful.
Alex Hormozzi's $100 million leads. Listening to it in my car, I was like, wow, this stuff is good. I didn't do anything with the book. And my client sent me the physical copy of the book, and I've sat down and read it and marked it up like crazy. And it's like, I was like, man, why didn't I actually do anything in this book the first time? Like there was so much gold here. And some of my favorite books that I've re-listened and or read were Obstacle is the Way. It's just the most amazing book.
Every Ryan
Yeah, that
Holiday book is
one.
wonderful.
Yeah, I love his stuff, and that one in particular. Just whenever I was not feeling great, that was my book. And then Think and Grow Rich, another classic that will always have a new meaning
Yep.
based on where you are when you read it. And the another thing I've learned that is really valuable, as best I can, is to carve out an hour. If you can carve out a half hour to an hour of every morning for deliberate learning and studying, it's amazing because it's so easy to get caught up in the whirlwind of tasks as an entrepreneur or even a W-2 guy. Um, and
For me, you're really talking about, funnily enough, you're talking about one of the great books I think everyone should read, which is
mhm,
Atomic Habits, James Clear. And there's a reason he's sold
yeah,
20 million or something. It's justified. And creating those habits is so important. So my morning habit will be, I get up, I have my electrolytes, I get my red light on, and I read as part of my daily habit, no matter what. I've got a minimum number of pages, no matter what is happening. Even if I was getting a 6 a.m. flight, so I've got to be up at 3 or whatever it is, I am still going to make sure I have do my minimum number of pages that morning. It's become a habit for about 4 years now. And that's vital to my mental health, my growth, that sense of achievement, and starting the day in the right way. Not to faff around and drag out the morning when I could be doing some real work, but good, powerful, inspirational stuff. So there we go. Read Atomic Habits to learn how to create the habits to read more books.
Yeah,
Could be a good way to go.
that sounds interesting. And it's easy, especially I think in any profession, but we have all these urgent tasks. We have things that are behind schedule. So it's easy to say, well, oh, I'm not going to read because this should have been done yesterday and this waiting for me. So this takes priority and this and this. But when you look back at all those things that you put ahead of your development, when you look back 3 years, 5 years from now, those things really didn't matter as much as you thought it did. So
yeah. Playing with urgent versus important can be such a challenge. So that sense of urgent, of the thing that comes up, the email at the top of the inbox, the little fire that needs fighting, can overtake. And then the important, which could be that long-term growth, what would happen if you read 30 pages every morning for the next year? Well, you would have read 30 books or whatever it is by the end of the year. And what that will do long-term for your business and yourself and your family, whatever it might be. It takes an effort to say, I'm willing to ignore the fire. I'm willing to ignore the instant gratification of responding to my emails and my texts and so on, to take that long-term view. And to me, it's the same stuff that says, why am I going to not eat the Dorito right now, which should be very tasty and lovely, and instead pace myself, eat the healthy food, go in the gym, which will benefit me in a month, in a year, and please God, in 50 years, whatever it might be. It's being able to let go of short-term pleasures, which is, to be honest, I think most people would say, often fighting the fire and replying to the email, it's a short-term pleasure thing. It's the dopamine here. I did something. It was useful. And being able to step back and go, I'm going to suffer the pain, the discomfort of not doing the quick response things, and I'm not going to get that dopamine hit. I'm going to take my time and take the long-term view because I'm thinking about a big picture here. And I'm going to take satisfaction from that, just like I'm not going to have the Dorito, I'm going to work out instead. I think it's so powerful. And I'm not saying it's easy, but I'm saying that we all have that power.
It is so easy to rationalize yourself out of doing those things. So the consistent discipline, and if you decide beforehand, you're going to help. I've found preventing it, like with the habits just embedded in yourself. Tell me about so let's talk about raising capital, because I know last time we were chatting about raising capital. How has that journey been for you?
It's interesting. Everything seems to take longer than I expect. Maybe that's just me and my nature. I'm like, well, if I don't want to do a thing, let's just go on and do a thing. That's not how most people operate. Going back to actually something you asked me, and I probably didn't answer it right at the beginning, around the capital needs for doing new construction, and could be the same for fix and flips and so on. I was blessed to have money from selling my old business. It gave me a great place to start. And then once the business got developing and really got going, we had brought a few private investors in as well. But having enough capital up front for flips or new construction is vital. They tend to all work in the same way. Unless you're going to do everything for cash and you've got enough cash just sat there, you've probably got a construction loan, or fix and flip construction loan, or a new construction loan. And the way those loans usually work is the lender goes, sure, I'm going to lend you $900,000 to build those 2 houses on that lot there. But I'm not going to give you any of the money. You need to go and do some work. Prove to me you've done it, and then we'll give you the money back. Cool. So I need 150 grand to go and demo some old house, pour the foundation, begin framing, and then you'll give me that 150 back. Yep. Okay, so I needed that 150 as well, that working capital piece. That's been one of the hardest things. And we're getting better all the time. With the more projects we do, in some ways easier it gets because they kind of support one another. But you've got to make sure you've got a ton of working capital just sat there, easy access. You don't want too much of it because you don't want to get to the end of the year and go, damn, there was so much money permanently in our bank account. We left potential profit on the table because we could have taken more profits on, more projects on. But there has to be enough. And we've been there. We've got to the end of the year and gone, we could have made more money. That's a shame. We've also been there when it's got really, really low and we had to find ways of pulling more capital in short term because we're running behind and the money's all available. The lender goes, sure, I'll give you the money for the roof and the kitchen and the cabinetry, but just go do the work first. It's like, oh, well, I haven't got that money, so I need that money. It's tough. I don't want to sugarcoat it. It takes a lot of planning. It takes experience because you have to have gone through a number of projects to see what those low points are. We know that at 5 months in, we could be up to 300 grand behind or out of pocket in working capital behind the draws from that lender or whatever the number might be. And we have to have that money and know for sure we'll have that money either at the beginning of a project or we know it's coming when the time is necessary. So that is not fun, but a necessary part of the game. What was your original question? I want to make sure I don't go too far off a tangent. Yeah, so then on raising it. So for us, because we use leverage like this, we use construction loans where they'll put something towards the purchase of the land and then 90 or 100% of the construction cost. If we're doing a $500,000 piece of land and $1 million build, we don't need $1.5 million. We need $500,000 because we're borrowing the rest. And that $500,000 basically gets us an entire project with working capital and everything else. So we've done that with a few private investors. We actually have a fund open now. Sounds like a sales pitch, but the fact it's a 506c fund, and I'm sure you and many listeners know, I can't even say much about it anyway, because I don't want to be selling the thing too much. But we've got a fund going right now that people could invest in, and it's a growth play. And it means, like I said before, if you want to be the amateur and it's your side thing to have some rentals, if that's right for you, great. My recommendation is don't go build houses yourself. Don't go flip houses yourself. If it was a sales pitch, be like, hey, just come to Brownstone. We'll do it for you. You know, we're building 10, 20, 30, 40 houses, what we're working towards at a time. We spread the risk. We have the experience. We look after all those problems, and you just invest in that and hopefully enjoy some nice returns. So that's what we've got going on at the moment. So our fund is starting to bring money in now as we start to create sales agreements with some broker dealers, and they put it in front of their clients. We've got some cool tax break opportunities within ours, which were a good IRA Roth conversion play, so people can do some clever stuff there. And that's a big part of how we raise. And it's just a case of showing people our track record, being honest about the fact we don't get it right all the time, but we protect you as an investor because you're not invested in a single home. You're invested in the whole company or the whole fund of 5, 10, 15, 20 homes. And ultimately, you don't care, and I'm saying it in a flippant way, you as an investor don't care that I'll lose a fortune on one of those houses. You care, how do I do across 15 houses? And if 2 are awful and 5 are okay and 5 are good and 3 are amazing, then the overall story is very positive. And that's what you really need so you can get on and do your normal job.
Yeah,
that's kind of how I look at it.
I've seen folks, because the returns here are far greater than putting your money passively in the stock market or in savings accounts. And obviously, there's a limit on, if you were to look at the heavy regulations, that you can't really promise or guarantee. And obviously, there may be instances of deferred returns, but what we've seen here is when folks get this up and running and have a proven success record, there'll often be like a waiting list to be one of those partners in these deals because the returns are so high. And when it gets consistent enough, it's like you can't sell it fast enough, which is pretty cool.
Yeah, I'd like to get to that place where we have that reputation as far as funds go. We're newer to the funds world. We're not new to the real estate. We're not new to the new construction. We're newer to funds. And I like that. I have that vision in my mind that in a few years' time, people will be like, okay, when's the next one? We're ready. I want it, and I've got more capital, and I'm going, I've got nowhere to put it right now, but give me a couple of months as a new fund coming. I would obviously like to move towards that stage eventually.
Now, here's another question for you. Is with all these projects going, and because we've seen this in our line of work as well, is that from accounting perspective, this is intensive here because you have to maintain and track the inventory for each separate property. So we know how to calculate what's the cost of goods sold here. And your
Yeah.
profitability is far different of the that it doesn't quite reflect what's in your bank account because so much may be going into these other funds. So how do you maintain a strong system for tracking your inventory and being confident in your numbers and having a team that's taking care of all this?
Yeah, it's a good question. We've got a great team who've developed a great system in-house for how we manage that. And yeah, you can imagine how messy it gets. There could be 6 different projects with 9, 10 homes being built across those 6, because often we build 2 homes on one lot. And you've got your handyman guy doing some work across 4 of those different projects, across 6 different houses, with all these different little bills here and there. You got to keep track that $400 was for this and that $1,200 was for that, and so on and so forth. And obviously, with the likes of some of the great apps these days, where you can just take a shot of an invoice and you can apply it to something, and then with the likes of QuickBooks and so on, and we've got a great bookkeeper. And obviously, a bookkeeper is more cost efficient than an accountant for that basic work and managing it. And we make sure that we're keeping our great records in house, that every single invoice, every single bill is going through a double check system that it was on budget, it was what we were meant to be spending, and B, it matches the bid that we received at a previous point from that vendor. So yes, this is right, pay the thing. And then we make sure it's well noted which property, it's property number 7, that applies against, to make sure we've got a really clear picture of how each home is performing. There's lots of automation in that and lots of manual in that. We are actually working on some AI and database stuff to make us significantly more automated. Because you talked about where should you invest your money. Well, for us, investing it into good automation and good AI can actually mean that we can save and become much more efficient as we grow. We don't need to take on as many people as you would think, because all that stuff gets taken care of in the background. But it's very important and it's complicated. We're trying to make it simpler all the time.
About so is this bookkeeper full time for you, or is it someone who serves?
The person we work with at the moment, she's superb. She's independent. She has her own business, but she personally is working on our stuff most of the time. She has a team as well, but she does a lot of our stuff. We've got a great relationship with her. And then our team, we have one person particularly within our team who has that direct relationship with her on a day-to-day basis, and they're constantly communicating daily, weekly, monthly, piecing it all together and trying to keep it as clean as possible.
That's a very important relationship to have, and you really want to make sure. We've had clients in the past who had good bookkeeping relationships, and they say, "Hey, can you take over our books? We just want to see what you charge or what you do." And I said, "Are you kidding me? Like, we've had no problems with your bookkeeper. Like, you know how hard it is to build that relationship and establish that alignment with your bookkeeper." Like,
yes, and where maybe they understand your business and they understand the quirks, and then something comes through that doesn't seem to make sense, but they sort of go, "Hang on, I remember this. We had a situation like this 3 months ago. I'll just check with you, but I think I know what this is all about." And you gain that efficiency because you get to understand one another.
It's like a quarterback wide receiver relationship. Whatever, I mean, it's just so critical.
I'm sorry if that was an American sports reference. I have no idea what you're talking about.
I'll try to come up with something else.
Something that I call football that you call soccer. No, I think I know what you're talking about.
But yeah, super important. Well, it's great that you have that established, because I've seen where it isn't established and it can really cripple the functionalities of the business, and all sorts of chaos can ensue when you don't have reliable records. So tell me, Dan, as we wrap this up, tell me about, what I'm interested to know is, if you could say what's one thing that you do, or one thing that makes you different, that's unique, that is attributable to your success, that may not be common among people doing land development.
Ooh. You're really going to make me just pick one?
2 if you're stuck between the 2.
As a business, There's a couple of things that make us different, I think, that stand out to me. One is our focus on three key pillars in terms of what our homes are about. So we are high design, so we're trying to create the nicest home. It's very subjective, but the nicest home on the market within its price point. But we found a way of doing that without spending any more money. That's a clever little hack. It's pretty important. High quality, because and people can come and buy the house, but I want them to be happy in their house a year later and 5 years later and so on. And a third pillar of that is healthier. So we're actually making our homes healthier and healthier these days, because I think it's the right thing to do, because our homes are made in a way these days that are not very good for us. So we're trying to do our little part to address that. So the homes we're building are different, a little more special because of that. The second piece is probably how we treat people. So we've got on the wall, I'm actually looking at it now, the brownstone way, inspired by Hewlett Packard's HP way. They were the first company 60 odd years ago, I think, to kind of put their values and beliefs up on the wall. And lots of companies have this these days, the piece of paper on the wall, and it's often just a piece of paper on the wall. But I came from a business 30 years plus of my life, from when I was 17, 18, 19 and first started working my old business, that has always been values led, and the piece of paper on the wall is actually a guiding light. Now, everyone's got a different way of explaining all of that. And I'm sure every company basically says the same thing. It all says, be nice, don't not be nice. And there's a lot of detail beyond it. And that's what ours says. But we actually genuinely, and it can sound cheesy, we put that stuff first. So it's about how we treat people, how our people have to act. And if you don't want to act in the right way and treat people in the right way, then don't be here. And I think suppliers see us differently than the subcontractors see us differently. And how we operate is different, because you can actually be nice and do the right thing and have a successful business. It's not one or the other. I think that is really significant. And actually, you said two, and I'm going with the third. It's connected to this. I really believe that most people, maybe every person on the planet, is capable of achieving even more than they think they are. I think we're the most amazing beings, and we're trying to do our little bit within our own team to encourage that. So we do a lot of personal development, a lot of training in-house, but we also get out of people's way and trust them to go and achieve amazing things. And the more you can empower people to work out their own best way of having success, the better. So we have a results-oriented work environment where we have no fixed hours, no fixed vacation, very few fixed rules. Basically, you work for us in such and such a role, and we pay you X amount a year to achieve Y, whatever that thing is. As long as you treat people right, you go find your best way of doing that. And people grow because autonomy is such an important driver. People grow, they feel that they have control, agency over what they do in life, and they do better work, and they're happy because of it. So there you go. I squeezed in three. I got away with it.
You also have to tell us now, because now I know there are some restrictions here on what you can say because of, what Joe would call the sales prevention department. But if someone's interested in learning more about what you do and maybe even being an investor in some of your projects, and I know you can't solicit, and there's all that stuff there. Yeah, but
sure.
also,
what can I say?
Tell us a little more about what it means to have a healthier investment, a healthier home, and how can someone learn a little more about this and connect with you and learn more about what you're doing here?
Cool. Okay, so healthier home. I'll pick out a few things that are top of mind because they're easy. Whole house water filtration. The quality of the water in the world these days is awful. So you put a system in to filter it before it enters your home at all, and they remove all sorts of contaminants that shouldn't be there. Paint, internal paint, it's toxic. It tends to be made with all sorts of plastics and metals these days, which get into the air, they seep into your home, and there's mineral-based paints you can use. We have an issue now where we must make these airtight boxes in our homes where there's no natural airflow. And there's ways of creating more natural airflow to pull more of the outside in, whether it's winter, summer, doesn't matter. And actually letting that air flow also minimizes how much moisture gets caught in the walls, reduces the chance of mold, and mold toxicities are really bad for us. And the list goes on and on and on. And yeah, we're not at the place where I would put a stamp on it and say, Daniel Brown approved healthy home. because my standard's really high. 3 to 5 years from now, I want to be at that place. So what we do is we just keep adding on new elements, little things we can tweak and change to make the home healthier and healthier and healthier. The insulation that you use, the blown insulation that goes between the walls, a lot of it has nasty materials in. It sneaks into your air conditioning, and then you're blowing it into your home and breathing that in. Not great. So we're doing what we can within what's affordable and achievable, piece by piece, every few months, to keep adding in another element and another element. So eventually I can give it my Daniel Brown stamp.
That's really cool.
And as far as investing, so what am I allowed to say? So I'm allowed to say that separate from our fund, we do private investments where people come in and do a fixed rate thing for us. So somebody comes along and says, love what you guys are about, I'd like to invest with you. And it's not tied to any particular home. It's an investment in Brownstone, and it's like a fixed rate thing. And we usually do growth plays. So I'd love to come and put 100 grand in for 3 years, and we pre-agree the 3-year term and the interest rate, and it's a cumulative compounding thing. So I'm making this number up. It's not a commitment of anything, but somebody agrees a rate with us of 12%. Well, 12% a year for 3 years isn't 36% if it's compounding. It's actually about 43. I'd need to work it out, but you know how it works. And somebody knows that on that day, in that year, that's when they receive that back, and that's great. And it's protected in the sense that whilst nothing's ever guaranteed, it's spread across our whole company. And again, you don't care about the performance of an individual home. You just care that Brownstone is still around in 3 years and doing okay, that you see a return. So that's something we've done on and off for years. The fund, I can tell you a teeny bit about it, because if I was 6C, and C allows you to solicit a little bit, it's accredited investors only. It's also a growth play. We're looking to raise around $10 million this year. And the idea is that will allow us to take on 15 plus new lots in and around Austin, which means building maybe 25, 30 new homes, because we often do 2-on-1 lots, sometimes 1, sometimes 3. And it's a growth play. The idea is we design the homes in-house, we build the houses, we sell them, we reinvest all the proceeds and hopefully lots of profits as well. And we do it again, and then we do it again. We do 3 rounds of this. So over like 3 to 4 years, we go through 3 rounds of that investment. Maybe we'll go through 100 houses, give or take. And if somebody's invested with us, there'd be a preferential return at the end. So assuming we've made a profit, they get a piece first. And that preferential return is based on 10% per year. So let's just say the fund takes 3.5 years to come to a close. Well, there's 35% return, assuming we've made enough, and we keep saying it. So I can never have missold. If we've made enough, there's your 35% return over those 3 years. That's very nice, 3.5 years. And then there's a profit share where a significant percentage of the profits of the fund are split towards the investors, and we take a chunk as well. I can't say what the forecasted returns are, but to me, in my opinion, they're pretty sexy. And the idea is we're diversifying for you, because I'm not against multifamily investments. I'm not against commercial. I just worry a little bit at the moment. If it was me and my money, it makes me nervous when you're going to invest in some big apartment building. And it's kind of all the money is going into one big decision for how that particular piece of land, that particular area, that particular part of that town is going to perform in, let's say, 5 years' time. It's kind of all or nothing. And we're in a world that seems to be changing ever more quickly. It's very volatile at the moment. What I like the idea of, I'm going to have to make 50, 60, 70, 80 little decisions over the 3-4 years. And each one's only going to be pretty good a year out, because I'm going to sell that house and move on to another one. And I can keep tweaking and being agile. And if a few of them aren't very good, no problem. If a particular price point or area starts to perform more weakly and we need to move 10 miles down the road or 50 miles down the road, no problem, we can. And we can keep shifting. And that gives me peace of mind. That's how I sleep at night. And I'm hoping that gives investors peace of mind, that that's a great opportunity for them to know that we're doing that kind of on their behalf. That's why I like it. And I'm pretty sure that if FINRA or the SEC is listening, they'd go, yeah, Daniel, you did okay there. You didn't oversell it. You didn't promise anything.
Awesome. So where was the website or profile or?
Our website is easy. It's brownstoneci.com, capital investments, brownstoneci.com. Check out our Instagram because it's very live and you're getting a sense of what's going on all the time. So that's Brownstone Capital Investments. And if anybody wants to reach out more, then they can contact us directly. I'm Daniel at brownstoneci.com, and we can, share information. We can check people accredited investors. We can send them PPMs, the whole shebang, or we can connect through their financial advisor,
Awesome,
whoever
dude.
it might
Well,
be.
I got to run into another meeting, but I really enjoy our conversation. And this is my
Cool.
first time learning about healthy homes. And it also makes me feel a little uncomfortable by all these things in my home. But yeah,
Get outside
absolutely.
more.
Hey, Dan, wonderful talking to you. We'll be keeping in touch. If you guys
Thanks,
enjoyed the
Mark.
show, give a like and follow. And also, if you want to learn more about us and using our services or joining our team, we're always hiring. Go to markprolbercpa.com. Have a wonderful day, everyone, and take care.